Another month and another all-time high for US stock markets. This time around, we're going to look at the Dow Jones. It's up 90% since the March 2020 lows. Is it too expensive? Is there a crash coming in? Or is this market set to move even higher? We haven't looked at the Dow Jones for a while, so I thought it'd be interesting to do an update on this market. This is the last couple of years. We can see the lows down in March 2020, down ahead of 18,000. The market is currently trading at 35,400 after once again moving out to all-time highs in August. There's always a lot of talk when markets are rising about when is the next crash coming. Surely it's overdue a correction, but US stocks continue to push higher. So I thought, as usual in this video, I'll talk a bit about some of the recent news, why we're seeing the market going up, what the chances are of a crash. Then we'll come back onto the platform and take a look at a trade potentially in a bit more detail, because I do think there is a trade to do. If we have a look at the trades we've got open at the moment. So we've got the usual mix of stuff. We do have some stock trades in here. There's a Tesla trade that's been running for a while that's up about £370 so far, buying in at 580, and the market's currently just below 707. There's a trade on an index, Nasdaq trade, from the beginning of July, buying just below 14.6, and the market's 15.3 at the moment. Dollar Tree is another stock trade. There's a DAX trade, European Stock Market Index, obviously. And then we've got Kraft Food, FTSE China A50, Starbucks, and Apple right down here at the bottom. So we do have a mix of different stock trades, but nothing on the Dow. So we'll see if we can correct that. I'll talk a bit about them now, then we'll come back onto the charts and take a look at things in more detail. Hello, I'm David Jones from Capital.com, and this time around, I thought we'd take a look at the Dow Jones index, the oldest established stock market index. We tend not to look at indices much on this channel. I think a lot of our viewers tend to prefer some of the commodities markets, which I think is a bit of a shame, because I think if you're not looking at stock indices, and I'm sure most of us are, you're missing a big trick considering the performance we've seen over the last 18 months or so. Can this continue? As usual in this video, I'll talk a bit about some of the recent news, what's been driving the Dow, that sort of thing. We'll look at the levels to watch at, then jump back onto the platform, take a look at the charts in a bit more detail, and set a trade up, because we haven't done a trade on the Dow in what feels like forever. So we'll get something set up for that as well. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different videos throughout the week on the various markets we cover. Plus, of course, every Friday normally at 2:30 in the afternoon UK time, I run a live stream direct from our YouTube channel. If you're subscribed with the alarm bell notification pushed, you get a message off YouTube just as we're about to go live. Right, let's get into it and take a look at the Dow in a bit more detail. So the Dow Jones Industrial Average, to give it its full title, is one of the oldest and most well-known stock market indices. It's made up of 30 companies. So indices are like a basket of stocks. The Dow is made up of 30 individual stocks, meant to represent a reasonable cross-section of US businesses. But you'd argue, and I would argue, that clearly it's not going to be as broad an index as something like the S&P 500, which is made up of 500 stocks, but the Dow is still a very popular index to follow. Some of the companies in the index, some well-known household names in the US, 3M, American Express, Intel, Walt Disney, again, designed to try and cover a spread of different US industries. It's been a good year so far. Stock markets continue to go up. The Dow Jones is no exception. So the Dow is up around about 15% for the year to date. And if we wind time back to the March 2020 lows, when of course markets fell off a cliff because of the coronavirus, the Dow is up 90% from those March 2020 lows. So why have markets risen so much? Of course, we saw plenty of markets get hit in March of 2020, February, March 2020, as the coronavirus pandemic started to spread. I think the bounce back and the economic recovery has been stronger than a lot of people have expected. So that has helped propel stock markets higher. Plus, of course, money is cheap. Interest rates are at record lows, still incredibly low. So if somebody, an individual or a corporation, has cash on account just sitting there in the bank, the risk is it gets eroded by inflation. So a lot of this money finds its way into speculative markets like stock markets. The argument is, though, that given how much stock markets have risen, the Dow is up 90% since the March 2020 lows, that stocks are too expensive by historical standards. Investors are just paying too much for stocks based on what their earnings are at the moment. And the constant chant from some is that a correction or a crash can't be too far away. But despite these calls for doom and gloom, the stock market keeps going up. If you look at the S&P 500, we've seen several all-time highs hit just this month. The Dow hit all-time highs this month. So I think it's one of those things where, well, do you want to be right and keep calling for a crash? Or do you want to make money? Of course you can. You can do both. If you're a viewer of this channel, big fan of following trends. For now, the trend in these markets is up, so it might not come as too much of a surprise, but expecting further gains from here. But we'll take a look at the charts in a second and see what a sensible trade could be. First of all, let's talk about the levels to watch. So the immediate next target on the upside, the all-time high for the Dow earlier this month at 35,630. If it breaks through that, we're on fresh all-time highs again. And then I think we're just plucking out psychological levels like 36,000 next. On the downside, lots of support left on the way up. The most immediate one to where we are now, 19th of August lows, 34,560. But as usual, to put some color on these numbers and set a trade up, let's jump on the charts and see where the opportunities might be. So let's take a look at this trend first of all, and we'll come back and look at the price action in a bit more detail. So I've picked up on the sort of there's the second low after the ultimate low it made in March of last year. I think this trend line's done a pretty good job on the way up, and we can see this is a market that is clearly in an uptrend. We have higher highs, higher lows. The sell-offs, as we can see, tend not to last that long. We get fairly sharp reversals when we do see the market sell off for a few days. If we take a look at a moving average, so we've got a longer term moving average here, a 50-day moving average. And if we have a look just at this year so far, the Dow does not spend that long below its 50-day moving average. The longest period was here in June, where it spent almost a couple of weeks below it, but then snaps back above it. And the moves we get are more like the moves we saw here in July and here in August, where we get the dip below, but the market pretty quickly turns around again. The latest signal from the moving average we had was a buy signal. Just as it sold off from that latest all-time high, it crossed back above the moving average. So not surprisingly, with the trend being up, the moving average is positive. Let's take a look at the RSI. So I don't think we're getting that much from the RSI at the moment. It had a look near overbought mid-August on that all-time high. The market sold off, the RSI unwound from being overbought. The market's pushed back up, but hasn't quite taken out that all-time high yet to set a fresh one. Not too much going on with the RSI. If we did see the market push higher and the RSI stayed below the previous peak, that would be what's known as bearish divergence and can be a suggestion that perhaps the weakness is running out of steam, but nothing really from the RSI at the moment. So what I would like to do is set a trade up, and we're going to do it based off the price action. Look at the big levels to watch. Let's just zoom things out. So we've got lots of support for this market. The most, I think, major level in recent months is that June low, 33,030, near enough. Let's call it 33,000. So I think, even if the market was to drop 2,500 points from where we are now, that's only, a 7% drop. I'd still be watching to see if we saw buyers come back in ahead of 33,000. So for me, from a longer term point of view, looking at the months ahead, I think it's only if this market sort of starts to crumble below 33,000 do we need to worry that this trend is finally coming under some pressure. But for now, I think it's, I'm going to go with the trend. The trend is up. We saw all-time highs within the last couple of weeks or so. So for me, I want to be a buyer when the market's doing that. When it comes to targets, I suppose, 38,000 perhaps is not too over-optimistic by the end of the year. The market's up 15% so far this year, perhaps another 10% is not too crazy before the year end. But for now, at least, expecting higher highs again. So let's take a look at the short-term chart and try to plan the trade. So here's the hourly chart going back about 5 weeks or so. That was that fresh all-time high. The market came off that pretty quickly, but held. We can see, what important support, sort of 34.6 to 34.800 is. We've had fairly low volatility the last few days, so perhaps the market, we could see it under a bit of pressure from here again. But for me, I want to use any weakness as a buying opportunity. As usual, the only question is, well, where's my stop loss going to go? At the moment, the closest I'd have it looking at this would be the other side of 34,500, something like that. So what I might do is leave an order to buy on any weakness. So what I'll do, I'll leave an order to buy at 35,000. So if the market drops 400 or so points from where we are now, buy. And then if that order gets filled, put a stop loss. Let me give the market a bit of wiggle room. I'll put a stop loss down at 34.2. So I'm going to give the market a bit of room to prove me right. If the market starts moving out to fresh all-time highs, I'll start moving that stop loss. But let's set that trade up. Right, I'm ready to go. So the market at the moment is 35,429. I've put an order in to buy 0.43 at 35,000. You can see it there on the chart. So if you get a bit of weakness and it dips back to where it was just a few days ago, 6 days or so ago, that order will get filled. If that order gets filled, I don't want to get taken out in the noise, so I'm setting my stop loss at 34,200. You can see that there on the chart there. So well beyond this sort of sideways range we've had, bar the all-time high. During August, and that's for the usual risk of £250. It's 800 points away from where I'm going to get filled if the market does sell off to 35,000. So that's it. I think that's a fair enough trade based off the hourly chart. Let's place the limit order so that can just sit there now at 35,000. So the order is placed by 0.43 of the Dow at 35,000. So even though, medium term, I'm expecting this market to go a bit higher, we all know we have plenty of volatility short term when it comes to US stocks. So perhaps I'll get filled on that if we see a bit of a blip lower over the next few days. But as I say, from a longer term point of view, it's only if we start to slip below 33,000 would I worry that this big trend we've been in since March, April last year is really changing. That's it for this update in the Dow Jones. We will see if it continues to push higher from here, or if this much talked about crash by some ends up happening in the second half of this year. But for now, we'll leave things there. So from me, David Jones and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.